Members, this is the appointed time. We have a quorum. So the first thing is to elect the chairman. Nominations, please. Mr. Angela, Mr. Chen Kam Lam. Anyone seconds? Mr. Felix Chung. Seconds. All right. So Mr. Chen Kam Lam is returned as chairman. All right, do we need a deputy chairman? No? All right, thank you. Let's invite the administration in. May I welcome Mr. Jackie Liu, Principal Assistant Secretary for Financial Services and Treasury, Ms. Rosalind Zhang, Principal Assistant Secretary for Security, and also Mr. Stuart McLean, Head of Anti-Money Laundering and Financial Crime Risk of Hong Kong MA, and Mr. John Dare, Assistant Secretary for Financial Services and the Treasury, and Mr. Alice Lai, Government Counsel, Department of Justice. So, PAS, would you please walk us through this notice? Thank you, Chairman. Just a brief introduction. For members' reference, on the Anti-Money Laundering and Counter-Terrorist Financing Financial Institutions Ordinance Amendment of Schedule 2 Notice 2015. The notice is quite a simple one. This is just a technical amendment because the Schedule 2 Section 18 will expire soon. So we intend to amend Section 18.5 of Schedule 2 to provide for an extension so that financial institutions may rely on intermediaries to carry out CCDs. Now, the period will be expanded to the 31st of March 2018. I believe members are quite familiar with the background. The relevant AMLO came into effect on the 1st of April 2012, and the schedule sets out the CCD customer due diligence and record-keeping measures required to be carried out by the financial institutions to tie in with the recommendations with the Financial Action Task Force, FATF. And according to Section 18 of Schedule 2, the financial institutions may appoint intermediaries to carry out CCD measures on the following conditions. That is, the intermediary must give consent in writing to be the financial institution's intermediary, and also the financial institution is satisfied that the intermediary will, on request, provide a copy of any document or record of any data or information obtained in the course of carrying out the CDD measure. And thirdly, the financial institution must be satisfied that the intermediary has adequate measures to prevent anti-money laundering or counter-terrorist financing. And in accordance with Section 18.3a of the same schedule, intermediaries include a solicitor practicing in Hong Kong, a certified public accountant practicing in Hong Kong, and a current member of the Hong Kong Institute of Chartered Secretaries practicing in Hong Kong, and finally, a trust company registered to carry out trust business in Hong Kong. However, this section will expire after the 31st of March 2015 because several years ago when the AMLO was enacted, there was a clause that this section will expire 3 years beginning of 3 years beginning on the date of commencement of the ordinance. And the purpose of this section is to provide a transition period for the 4 types of intermediaries mentioned, so that they can have time for the 4 sectors to set up a statutory AML-CFT regime on par with the same applying to the financial institutions in accordance with the AML law. And our intention is to extend the expiry date till the 31st of March 2018 by amending Section 18(5), so that in the interim, the financial institutions may continue to work with the legal professional bodies, the CFA Institute and the Institute of Chartered Secretaries, so on and so forth. And these professional bodies have strict guidelines and requirements and compliance measures for members' observations. And we'll continue to work with the relevant sectors to enhance and strengthen their AML-CFT compliance. And we also note that in other international financial centers, they're also looking into the implementation of FATF's recommendations. As development is ongoing, we believe that as far as the transitional period is concerned, the best way to go is to extend it by 3 years, because this will help financial institutions and their intermediaries to work together, if necessary, to perform customer due diligence measures as per the FATF's recommendation. And finally, in the past few months, we have been discussing with the financial services industry and the professional sectors mentioned, and they have no objection to the extension, and in general they welcome the extension. So we urge the subcommittee to support the administration's amendment. Any questions from members? Mr. James Toh. Chairman, I have a question. According to paragraph 4 of the electoral brief, there are 4 types, including solicitor. I need to declare my interest. I'm also a practicing solicitor. Now, for the 4 types of intermediaries, under this ordinance, they can act as intermediaries of financial institutions in carrying out the customer due diligence measures. And you mentioned that for the 4 sectors or other sectors relevant, they may also need to perform their obligations not as intermediaries of financial institutions. But I think this is not relevant, because for these types of intermediaries, they account for a small percentage. Well, my comment is that the spirit of the ordinance is to bring ourselves on a par with the FATF's recommendations. So even for professional sectors, when they act in the capacity of intermediaries, the FATF's recommendation is for an anti-money laundering or counter-financing terrorism regime to be set up for these 4 sectors. But as we enact legislation, we must also regard local circumstances. Financial institutions at present rely on intermediaries to perform customer due diligence. And at the same time, we must also observe international best practices. The international best practices are that these sectors should also be subject to the relevant AML-CFT guidelines, and yet there is not such a regime for these sectors at the moment. Under the existing legislation, we continue to allow financial institutions to rely on intermediaries from these 4 sectors. And at the same time, we do allow a transitional period for them to discuss when the 4 sectors regime can be brought to a higher level, so that they could strengthen or enhance their anti-money laundering regime. And as development is still ongoing, we're proposing to extend the expiry date. And Mr. James Toh just now talked about the appointment of intermediaries for financial institutions. As to whether these sectors would be subject to regulation as well, as a matter of background information, this is as I set out just now. Well, let me rephrase my question, perhaps because I'm not very clear. Let's say this will be extended for 3 years. My question is, why don't you table an amendment bill to make it permanent instead? Let's say in future, the 4 sectors in Para 4 may be subject to a higher level of regulation. So does that mean that financial institutions may no longer be able to rely on these 4 sectors to perform the financial institutions' obligations, so that if something goes wrong with one of the sectors, then the financial institutions will equally be in trouble? Now, if in future these 4 sectors are also brought under the AML regime in the long run, these 4 sectors can permanently become intermediaries, and we're still a step away, and we need to fulfill international obligations at the same time. At present, we cannot regard them as permanent intermediaries. We have yet to do so, but if we develop to a stage where all these intermediaries could be brought under the AML CFT regime, then they will have the requisites to be intermediaries. I don't think you understand my question. Let's say in future, when the 4 sectors are under a high-level regulatory regime, does it mean that financial institutions can no longer absolve itself from any liability simply because the financial institution has appointed an intermediary, such as a solicitor, to carry out the CDD? Well, in fact, in subsection 2 of the schedule, the financial institution is still liable for not carrying out CDD measures, even if it has appointed an intermediary to complete the statutory CDD measures. So in future, ultimately, the financial institution will be responsible if the CDD measures are not carried out. Now, some financial institutions may think that because the ultimate responsibility lies with the financial institution, it may as well perform the CDD measures themselves. Some may opt for intermediaries, and we consider this arrangement the most appropriate because, if necessary, financial institutions may appoint intermediaries to carry out statutory CDD measures, and the financial institutions at the same time will be the ultimate responsible party for failing to do so. Now, if I remember correctly, at the time, some members also took part in the scrutiny of the bill. Now, I don't know, perhaps for smaller banks, they may not have an independent or separate department for this purpose. And for mortgage application, the customer may be approached directly by the solicitor instead. So if you're asking the bank to perform a series of measures, then it may not be fair to the bank. So I recall at the time there were views from the banks that once the banks appoint an intermediary, which is also subject to the regulation by its professional body, the banks should not be subject to any penalty. So I thought that this system is designed to absolve financial institutions from any responsibilities. So if in future the level of regulation is stepped up, I don't see why the financial institutions should still be responsible.
Well, under the existing regime, in appointing an intermediary, in the end, the financial institution will have to bear the ultimate legal liability. So that's the requirement of FATF, so that the FI appointing the intermediary will have to be sure about the capability of the intermediary. That's why Schedule 2, Section 18, has very detailed provision with regard to the requirement of the intermediary before it can be appointed. And in doing so, under Section 4, the FI will have to be able to get the relevant data and information from the intermediary, and upon its request, the intermediary will also have to provide the information to the FI to complete its internal procedures. So that's the recommendation of FATF. You talk about the consent and also the production of information or papers and so on. You will have to satisfy them. But then yesterday, if they are aware that it's being investigated, and still if you engage them in doing mortgage arrangement and so on, and of course you'll be breaching the requirement. But then so long as they have completed all the procedures, then they would have exercised due diligence. Then why would you still say that they would hold the ultimate liability? All right, if you're appointing somebody who has already met the highest requirements, then there is no way that you will have to bear the ultimate responsibility. So that's something very fundamental, isn't it? Well, that's the requirement of FATF, but then they are asking you to be responsible. But then in doing so, you've already exercised due diligence in appointing someone who is of the same level of competence before you do so. So after I've engaged the intermediary, it doesn't mean that I would no longer be required to take up any responsibility. So the requirement is that even after appointing the intermediary, the financial institution will have to bear the ultimate liability, so as to ensure that the CDD measures in the end are in line with the requirement of FATF. But then that's the way you put it in the bill. But then in reality, so long as they've already discharged the duty can also be reasonably passed on to the intermediary. All right, if I've already reasonably passed it on to the intermediary, and assuming that they've engaged in a criminal act, does that mean that the bank would also have to have its license suspended or revoked? Would that be reasonable? Well, let me stress again that the ultimate responsibility would still be in the regulator. And under the existing regime, it says that if the FI has appointed the intermediary to do the CDD, then in the end, it will also have to hold the ultimate responsibility. That is to ensure that the regime is robust and sound. But then whether or not we would be enhancing the requirement to the respective professional sectors so that they would have to meet the statutory requirements with regard to AML and CFT or CTF, we will have to see whether or not in appointing the intermediaries, what the responsibilities should be. And if the FI or the intermediaries are doing this, then where should their responsibility lie? I think in the future, when we enact the legislation, we will have to look into this. But then today, what we are talking about is a transitional period, and we are trying to extend that because the relevant sectors are still not subject to the statutory AML or CTF regime, even though the professional bodies like the Law Society or the Chartered Accountants Associations have been doing this in order to ensure that they can meet the requirements under the CDD. what we're trying to do is to extend what is being enacted as of now, so that the financial institutions will still be allowed to appoint intermediaries, but then in the end, the financial institution will have to bear the ultimate responsibility. I'm glad to hear what you said just now, but then I suggest that you will have to think about it very carefully, because 100 years down the road, all right, you're adopting a very stringent regime, all right, they are doing the job very stringently. All right, the banks are also doing this very carefully. So they have appointed someone whom they trust, and they have not been convicted of any misconduct before. Then if you still require the banks to shoulder the ultimate responsibility, I think it's unfair. Next, Mr. Ng Leung Shing. First of all, let me declare my interest. I'm a member of the banking sector, and according to the banking sector, we always support aligning ourselves with international requirements. We are always happy to comply with the requirements. And looking at the current amendments, if a financial institution appoints an intermediary to do the job, and in the end the financial institution will have to shoulder the ultimate liability. So it's like recruiting the right staff to do the job. In the end, is the bank which will be holding the final responsibility. I don't think that's a problem. But then in the end, if our rifles are the same, then the compliance cost and also the operating cost and also the efficiency will be the same, because for banks the most important thing is efficiency. So long as we remain competitive, it's okay. So my question for the administration is, have you made reference to other financial centers like Hong Kong to see if they are doing the same, and there is also a time limiter. So have they been doing the same for the past 100 years or so? Well, Schedule 2, Section 18, the arrangement is in line with FedEF's recommendations, which are international requirements, and in appointing intermediaries, and also the ultimate legal liability, who should bear the ultimate responsibility, and so on. At the time when the law was enacted, we already made it clear that we had to comply with international requirements, and other international financial centers are also doing very much the same in putting in place a CDD regime. So in doing so, I think for the individual financial institutions' competitiveness, that would not undermine their competitiveness at all. I think we need to strike a balance between the compliance cost and also meeting international requirements. We have to make sure that everything is done in an efficient manner by engaging intermediaries to do the job. So have you done any assessment whether or not there might be impact on the banking sector? We have talked to the Banking Association and also the professional sectors in preparing this amendment notice, and the Bank Association also welcomes our move because of the extension of the transitional arrangements that would also facilitate the financial institutions in engaging intermediaries to do the job, so that the two can work together to comply with the requirements under the AMLO concerning CDD measures. So I believe that the current extension proposal, as far as the financial institutions, including banks, are concerned, the impact would be minimal, because they would then be able to continue with the existing practice in appointing intermediaries. But of course, I do not rule out the possibility that for individual financial institutions, because of their own very robust department in anti-money laundering, they may not need to appoint or engage intermediaries. But then we also have to take care of the fact that within the banking sector, there are banks are of different scale of operations. That's why we'd like to extend the current arrangement so that for banking institutions or financial institutions which are in need of this, they can continue with the current practice. We have already taken into account members' concerns about compliance costs, competitiveness, and so on. So we have taken into account these factors, and we feel that the extension arrangement would be the most appropriate one. Thank you. Mr. Felix Chung, I'd like to know a bit more about this. Well, it started on the 1st of April 2012. So it's been 3 years since its first enactment. In fact, for financial institutions requiring the assistance of intermediaries, how effective has it been? So have financial institutions told you whether or not they are able to meet the requirement of FATF? Because as you said just now, well, the Law Society or the Accountants Association, they've already got internal guidelines in dealing with AML or CFT issues. But then I'd like to know the outcome. What's the outcome? Is it effective? So do you have figures showing that financial institutions have engaged a certain number of intermediaries, or for some banks or financial institutions, they may have internal resources to deal with AML and CFT issues. So do you have the figures? Can we make a comparison? And my third question is, Mr. Chairman, what in the next 3 years, if the extension is approved, then at the same time, are you going to review the intermediaries? You refer to the 4 sectors. So, do they have the resources or interest to do what is required of financial institutions so that they can be on a par with the statutory AML and CFT regime in taking measures to prevent or preempt money laundering and counter-terrorist financing? Well, since the coming into effect of the legislation on the 1st of April 2012, as you are aware, in the banking sector and also the financial institutions, including banks, insurance companies, and also securities firms, as well as monetary service providers, i.e. the foreign exchange service providers, well, they've been doing this, and in the past few years, if you look at the prevailing trend and climate in terms of anti-money laundering, the sectors have been attaching a lot of importance to that, and through the SFC and the HKMA and also the Customs and Excise, we have been doing this, and we can see that all the relevant sectors have been working very hard to meet the requirements in terms of CDD and also record-keeping requirements in the past 3 years. And as far as I understand it, for the 4 regulators, we don't have the figures with regard to how many financial institutions would engage intermediaries in doing so. As far as I understand it, not all financial institutions will be doing this, because the ultimate responsibility rests with the financial institutions themselves. That's why many of them would prefer doing it themselves. But then I also understand that there are some institutions who might think that, well, for some professional sectors like solicitors and also certified public accountants, when they refer clients to set up accounts and so on, before they do so, the relevant intermediaries or professionals might already have carried out some CDD measures. For example, in accordance with the Law Society or the Certified Public Accountants Association, they might have already obtained some information from the clients in conducting CDD measures. So it's a question of efficiencies, given the fact that they have already done some of the or taken some of the measures, and if the internal procedures of the financial institutions would allow these intermediaries to take up part of the responsibility, then there is no reason why we should reject that. But then we do not have the figures reflecting the number of financial institutions doing this. But then we believe that the safest approach and also the arrangement that would have the least impact on the sector is to extend the transitional arrangements. As to the questions raised by Mr. Chung, in the next three years, we will continue to review the situation with regard to the 4 professional sectors, whether or not they should enhance or step up their measures in order to meet the FATF requirements. We will continue to monitor the requirements imposed by FATF on financial institutions in AML and CFT. And in particular, for financial institutions worldwide, I think FATF is also exploring this, because for different sectors, they are subject to different regulatory regime, and also the number of members would also be different. and also their business practice would also not be entirely the same. That's why we would need more time to observe the practices elsewhere to see how we can further implement the international requirements. So my simple answer to Mr. Chong's question is that we are not going to end at that. We will continue to liaise with the relevant sectors. We've been maintaining very close liaison with them as to when and how we're going to implement these measures, and whether or not we're going to do that across the board, or are we going to do that in stages.
But as the relevant provision will expire on the 31st of March this year, we propose, therefore, that the more time be given for us to consider the relevant arrangement. Yes, Mr. Zhong. Well, we're just less than a month away from the 31st of March. So the legislation period is very short. No legislation is required to be enacted because this is a negative vetting process. If we don't see any problem after our deliberation, then the extension will take effect on the 1st of April. Then, Chairman, do we need to meet with the financial institutions and the 4 sectors? Because Mr. James Toh just now mentioned that even if you engage intermediaries to carry out CDD, the ultimate responsibility lies with the banks. So my question is whether there is any feedback from these intermediaries, and what is their view on Mr. James Toh's point. Well, as Section 18.2 of Schedule 2 makes it clear that in appointing an intermediary, if the CDD measure is not taken, then the ultimate liability lies with the financial institutions. This is clear to the relevant parties and the professional bodies. And it is only on this condition that these sectors are appointed as intermediaries of financial institutions. As we've been discussing with the sectors and the FIs, and they're very clear about the arrangement. They also understand that this exercise is about extending the deadline, and we also have consulted them. They welcome the current arrangement. When there are new arrangements for the 4 sectors in the future, we'll consult them again. As for the existing practice, we don't see any objection from FIs or from the 4 sectors, so therefore we don't think it's necessary to further consult them, because this is just about extending the deadline. One final question, Chairman. Well, we hope that in a few years' time, when another review is conducted, these sectors could be brought on a par with the financial institutions in terms of the level of requirement. So I share Mr. James Toh's point. If they're brought to the same level, then the level of liability should also be the same. Well, when we come to that stage, when the intermediaries are also brought in under a stringent AML-CFT regime, and if in the course of business there is any breach of any intermediary under the stringent regime, it will be subject to the same sanction. So once they come under the same regulatory regime, the case will be handled accordingly. So it's not necessary to cite such a serious scenario at this stage, because ultimately, be it the FI or the intermediary, both will be subject to the stringent regime. And I accept Mr. James To's point. When reviewing the schedule in future, we will also consider the point in Section 18. But I emphasize that it is the international or the FedEx recommendation that whether the FI carries out the CDD measures or it engages an intermediary to do so, the ultimate liability is with the FIs. Let me ask a question. In your reply just now, you said that since internationally speaking, there are still no statutory AML CFT regime for intermediaries, we therefore are extending the transitional period. So do you know any good examples worldwide, and roughly how long will it take to set up such a regime? Say we're going to extend it till 2018. If, say, another jurisdiction sets it up in 2016, then will there be a need for us to revise the date again? The FedEx has been considering measures to help jurisdictions, including Hong Kong, to implement the requirements in an orderly manner. And FedEx, starting from this year, has started the 4th round assessment on each and every jurisdiction on its compliance situation. So far, only 2 to 3 jurisdictions have received or have undergone the assessment. And as for Hong Kong, we will go through the assessment in around 2018. So we need to wait for the majority of jurisdictions' assessment to be completed before we have a full picture of the situation, and to talk to the 4 sectors in Hong Kong on when they should come under the regulatory regime. And we'll continue to monitor the issue. If the commencement date is extended by 3 years, we will be able to continue to monitor FedEx's assessment process and plan our step ahead. So for FIs and the 4 sectors as intermediaries, they can carry out their businesses according to the existing system. Yes, any questions, Mr. Chong? Usually, suspected any money laundering activities may be detected by FIs in terms of suspicious money flows in their accounts. However, intermediaries are not or cannot check the accounts. So ultimately, would the case be referred back to FIs for, say, further investigation? Say, a solicitor may not know about the flow of funds of the customer. Thank you, Mr. Chung, for your question. The AMLO has to do with the customer due diligence checks performed by FIs, and that includes the KYC and also a long-term monitoring of the client's identity and the activities. So if the FI or any other intermediary or any person involved in the transactions or any person who has access to the information of the account and the flow of funds. They may be subject to the relevant legislation. Any suspicious transactions should be reported to the police, and information should be handed over to the police. And this applies not just to financial institutions, but to non-financial institutions as well. And there is an intelligence unit in the police force for this purpose. So this is also clear to financial institutions as well as the intermediaries. And all along there have been cases referred to the police for investigation. Mr. Ng Sing. Another question on intermediary consents in writing to be the financial institution's intermediary. Any reason for that? Well, of course, a consent given in writing may be more formal, but if the ultimate responsibility lies with the FI, then I'd like to know the difference between giving consent in writing and not in writing. What's the purpose? And whether there is any binding effect. Thank you for your question. Now, I believe the legislative intent for giving consent in writing is to be clear about the identities of both parties and for instructions to be clearly set out so that in the event of dispute in future as to whether the requirement under Section 18 of Schedule 2 has been met, it can be clear to everyone whether the FI has engaged an intermediary or not. This is a kind of confirmation measure. With consent in writing, and I believe in real world, for financial transactions, most of them are done in writing for confirmation. So this is in line with the usual business practices. Will the government consider making this a requirement on both parties, for both parties to fulfill their respective obligations, so as to make them understand their responsibilities? Otherwise, I mean, this can become a form of a receipt for both parties to understand their obligations better. So, is it necessary to consider putting in some standard provisions for intermediaries and FI in the consent form? I think the obligations are all set out very clearly. If there is not such consent in writing, basically the intermediary cannot act as the FI's intermediary in performing CDD. Yes, I think, Chairman, your understanding is correct. As for the format of the consent, written consent and what to be included, I believe the relevant professional bodies or the HCAP could develop the form, and when necessary the professional bodies can give guidelines to their respective members' reference. I don't think we need legislation for these details. The most important thing is that the spirit is to have a written consent to clearly set out the parties' responsibilities. And that's basically the spirit as set out in Section 18 of the Ordinance. As for the guidelines, I think this can be dealt with by the relevant professional bodies and HCAP. so as to give more flexibility to the sectors. If there are no questions from members, then let me ask legal advisor whether he or she has other questions. No? She has no questions. So we've completed scrutinizing this notice.
Well, we're supposed to report to the House on the 6th of February, so we have already passed that date. In other words, we will have to extend the scrutiny period, and we will have to extend it until the 18th of March. So if we were to extend it to the 18th of March, then on the 27th of February, we will then have to report to the House, and then we will report to the House that we have already completed the scrutiny, so that this amendment can come into effect on the 4th of April. On the 1st of April. So that's the long-standing practice in the past. So on the 25th of February, at the council meeting, I'm going to move a motion for the extension of the scrutiny period until the 18th of March. All right, Mr. Liu? I'd like to ask the Secretary, do you have any House Committee meeting this week, i.e. tomorrow? All right, if there is a House Committee meeting, then Chairman, can you give a verbal report to the House? Then there is no need for us to extend the scrutiny period. Is that the case?
你等等，我睇睇。係啊，呢個禮拜五係冇嘅。
No, there is no House Committee meeting. So there is no House Committee meeting this Friday, because we're going to have the policy address debate next week. So there is no House Committee meeting before March. So in extending the scrutiny period until the 18th of March, we can only report to the House on the 27th of February. But then that would not affect the commencement of the notice on the 1st of April. So I'll leave it to the Chairman, because I thought that there was a meeting of the House on Friday this week. Then I thought maybe you can report verbally, and then there is no need for us to extend the scrutiny period. Rest assured, there's not going to be any change to this. All right, if there is no further questions, then I'll adjourn the meeting. Thank you.